Dead Peasants Insurance, what is it? Dead Peasants Insurance, also known as janitor's insurance, broad-based insurance, or corporate-owned life insurance, or COLI, is an insurance policy placed on a company's employee. It was originally for C-level and other upper management executives, but in the 1980s, it was extended to cover lower-level employees. Who gets the money? The company. When the policies are paid out, it gets a tax break. During the life of the policy, companies could borrow against it. This was able to happen because the companies could prove they had an emotional state in the person's survival, known as insurable interest. What's going on, everybody? It's your girl, Deanna Diaz, business coach and entrepreneur, aka your business bestie. And today we're going to get into this Dead Peasants Insurance. Make sure you check me out on deannadiaz.com for all your business coaching needs and to reach out to me personally. So let's go ahead and get back into it. In 1996, the IRS made companies who took out policies on their employees stop claiming them as a business expense on their taxes. The IRS was tracking down as many as 700 companies who have claimed said expenses. They wanted to claim it on their taxes because when they made payments on the policy, they had to pay interest as well. As of this moment, banks are the only companies required to publish this information to the public. As of 2006, Congress passed the Pension Protection Act, requiring companies to give their employees consent to be covered by the company. Companies who have benefited off of Dead Peasants Insurance are the following: Winn-Dixie Stores Incorporated, Walmart, but they supposedly ended COLI in January 2000, but currently pending an investigation. Walt Disney World, Nestle USA, Pitney Bowes Inc., Procter & Gamble, CM Holdings Incorporated, Trans World, Entertainment Corp., bought by CM Holdings, Public Service Company, American Electric Power Incorporated, Dow Chemical Company, American Greetings Corporation, Donnelly and Son Company, W.R. Grace and Company, and of course, there are a lot more. Most of these companies who gave a comment on the place policy stated that it went towards their employees' retiree benefits. However, none of the retirees said they received anything. These policies are at least 25% of a company's net income. Younger employees have the biggest payout due to the chance of them not dying anytime soon, at least not from natural causes. As of 2002, that premium policy yielded between $400,000 and $500,000. Here are some people and their families who got screwed over from these policies. Check out this chart. All right, so let's go ahead and watch this news clip that came out about Dead Peasants Insurance and people who were affected by it.
Now to an almost unthinkable question. Could your employer be betting on your life in order to profit from your death? This is essentially what some companies are doing by taking out life insurance policies on their employees. Our senior national correspondent, Claire Shipman, has more on this, and we're going, huh? How can
Exactly. Life insurance policies on their employees, but who gets the money when they die? The employer. Robin, we were stunned when we saw this in Michael Moore's latest film. These schemes that really give your employer a reason to literally wish you were dead. But it's nothing personal, just about the bottom line.
Hello, I'm Ed.
Not so long ago, life insurance was pretty straightforward.
You need life insurance protection most right now.
Offering security to loved ones in a tough time. So when Irma Johnson learned her husband Daniel, who died of brain cancer, had been insured for $1.5 million, that should have been at least a small comfort. Except she didn't get the money. His employer did.
You didn't know about it.
No. It's one of the most bizarre free market perversions Michael Moore highlights in his latest film, Capitalism: A Love Story, a corporate practice dubbed Dead Peasants Life Insurance. Companies secretly bet on employees' lives, expecting to make a buck when they die. Mike Myers, the attorney who's uncovered many of the cases and has helped angry relatives sue, says it's pervasive.
Life insurance is traditionally used to guard yourself against the loss of a breadwinner or someone who's very important to you. This is used as an investment scheme.
Myers says dozens of blue chip companies have these policies, but only banks are forced to reveal them. Several have billions of dollars worth. We wondered why companies would even be interested.
The driving force behind it is the tax deduction.
That's right, a tax break. It was designed to let companies insure a few crucial executives, but savvy companies realized they could also get a tax break insuring a lot of lower-level employees. It's a financial scheme that doesn't actually cost the employees anything except, some say, their trust. But Tina Tillman felt shocked, deceived, when a Wall Street Journal reporter told her brother, a music store cashier, was insured by his employer for $339,000 when he died, though he no longer even worked there.
We were just in disbelief that they were able to do it and actually cash the policy, or cash in on the policy.
She sued and won. Now the government mandates companies get employee consent. Amegy Bank told us that Daniel Johnson gave his consent, but Irma Johnson says that's not true, and she's suing. Congressman Gene Green has been pushing for even tougher restrictions. Nobody's really being hurt, but it's so clearly creepy. So, how do you get at what really is wrong with this?
Well, we hope our laws are based on not only fairness, but morals. And to me, it's immoral for me to benefit from your death if I don't know you.
Meanwhile, for those who feel wronged and were never told about the insurance, it's up to them to brave the court system.
It was a matter of making sure that we did the right thing and that it was something that would honor our brother. We sent a message across to that company to let them know, you may have gotten away with it all these years, but not this time.
Not this time. And Claire, I don't know if you want to know, but how can you find out if your employer has taken a life insurance policy?
I know this is one of the problems. It's not easy to find out because until 2006, there was no federal requirement for companies to let their employees know. Now they are required to let them know. But again, the documentation is very hard to come by. And I think until that tax break is gone, companies are going to keep doing it.
All right. Okay, so these are my personal thoughts, okay? From a business owner standpoint, I wouldn't mind this policy as long as you are honest and upfront. I believe that part of the money should be given to the family. These policies shouldn't be on part-time, short-term, or seasonal employees. What I don't agree with is there's no end to the policy after the employee gets fired or if they quit. Now, what I will say is another reason why I don't mind this policy in an ethical standpoint is because you have some employees who do not have families, they do not have children, they may be outcasts of their family, and they may agree to this and they don't mind letting that money be used for the company. And you also have some employees who are like diehard fans for the companies that they work for. I know that sounds crazy, but there are people out there that feel that way, okay? And they may believe in the company, they believe in the mission of the company. So they're saying, hey, when I kick this bucket, go ahead and use these funds to the advantage of the company to, create that legacy or continue creating that legacy. There are some people out there like that. So now, if you are one of my D Nation members and you still work a 9 to 5, whether it's federal or state or regular civilian, did you sign a insurance policy like this? I want to know if you have in the comments below. If you don't think you did, but you can't remember what your onboarding process was like, you might want to go ahead and look through your files and make sure you didn't sign something that you didn't want to be signed. Have you heard of this before? Now that you know, if you haven't heard of it and you learned something new today, how do you feel about it? What do you think? Is it ethical or unethical? Do you agree with what I said or do you have a different opinion? Either way it goes, I want to know what you think. Make sure you drop that down in the comments below. Make sure you like, comment, and subscribe. Make sure you're subscribed and hit that notification bell so you can know when these videos drop. Also, make sure you check out deannadiaz.com for all your how-to business needs. I'm uploading content as we speak on there to give you so much more value so that you can run your business the way you need it to be ran. Also, if you want one-on-one coaching with me, I got you. I don't care where you live at, I got you. All right. Take care. God bless. I'll see you later, D Nation.